What up, Hyperchange? Welcome to another episode. Today we're covering Tesla earnings, hot off the press. I just got off the conference call, have a bunch of notes, charts. We're gonna run through all of the numbers and then go through the entire conference call. So we're gonna get right into it. This is the most important chart that I always start with when looking at Tesla. How many cars are they delivering in the quarter? This is the most important metric. They already reported this 3 weeks ago, so we knew they had sold 90,700 cars in the quarter. This was a record, and this is the quarterly financials leading up to Q4. This is the real numbers. When I put out my earnings preview video, this is what I had been expecting for them to report in terms of revenue and profit. Now, you'll notice this is actually decline, even though they increased that vehicle deliveries. And the reason for that is because they were just selling more of the lower sales mix Model 3, or that was my estimate. Totally wrong. This is what Tesla ends up reporting for Q4 2018. Revenue of $7.2 billion, operating income of $413 million, barely lower than the $416 million in Q3. So even though Tesla and Elon Musk said the profit was going to be less, and it was barely less. It was more like flat. This is the most important number and chart that I'm going to run through in the whole video. Anyway, now comparing this on a quarterly basis relative to other Q4s, you can see just how dramatic of a quarter this was. We saw revenue growth go up 120% year over year. And then in terms of that operating income, $1 billion swing in Tesla's bottom line. So now they've hit these economies of scale. We're seeing these incremental car sales drop right to the bottom line. And that's why Tesla was able to be profitable for the second quarter in a row. The other big chart to look at with Tesla here is gross margin. So what was happening in the gross margin? This is what I assumed was going to be taking a hit, and it did in the quarter because of those lower sales price Model 3. So it was actually pretty on point with gross margin estimates, but where I was way off in my model was this, the operating leverage in Tesla's model, the OPEX. So I had operating expenses here in Q4 of about 1,200. They came in at around 1,024. So we have like almost $175 million difference in the operating expenses that where Tesla's just they did that restructuring in June, laid off a bunch of people, trimmed a bunch of the fat. They're still seeing synergies from that. So operating expenses were actually like down about like 0.5% year over year even, and then that's not even taking into account the fact that they just did these huge layoffs in January. So we're going to see continued leverage in quarterly OPEX. More on that later. But anyway, to sum it up, you can see that the OPEX growth rate has fallen off a cliff. Tesla's expenses are barely growing at all, where their revenue growth is over 100%. And this has led to that, fundamental transformation in the business model that's so exciting. Now, moving into Tesla Energy, we are seeing, a pretty strong quarter from Tesla Energy, given that this is a seasonally weak quarter, $371 million, slightly above my $350 million estimate. And if we take a look at the annualized basis, this is the last 3 years of Tesla Energy revenue. They did about like 1.55 billion, I believe, this year. And if we take a look at hypercharts to get a little bit more granularity on what went down with Tesla's energy storage deployments, their third best quarter ever, not down slightly from Q3. Once again, I think that's seasonal, but the growth trend here in the energy storage is really, really strong. And so Tesla delivered about a gigawatt hour of energy storage. And in 2019, they're looking to double that to 2 gigawatt hours. So we're expecting huge momentum in this chart over the next year, the energy storage battery power pack, mega pack sort of deployment. So that was super good guidance. But energy generation deployed, the solar business sort of once again declined in Q4, down about 20% sequentially, down even more than that, or about the same year over year. And the solar business has sort of been on Tesla's back burner because this is still the panels is how they're generating the most of this revenue. And so Tesla's really still perfecting that solar roof product and working on that. And I think we're going to see solar megawatt installations be, flat, continue to kind of just die off until they reinvigorate that with the solar roof product. That's our update on the energy business, $1.6 billion in revenue. They say in the letter they're expecting rapid growth in the energy business in 2019 due to the fact that the energy storage deployments are going to grow. So we're looking at, I'm guessing probably about 2.5-3 billion in energy revenue next year for Tesla. Okay, so now moving on to an annual perspective for Tesla. For overall, we're looking at, these are the annual vehicle deliveries by year, 245,000. This is old news. Anyway, these are the financials relative to those years. So you can see that the record deliveries of 245,000 cars led Tesla to report record revenue this year of $21.5 billion, a loss of $0.4 billion. And so their top line grew 83% this year. I mean, this is, Tesla's valued like a growth stock. This is why 83% revenue growth. And even bigger than that, at least in my opinion, was the $1.2 billion swing in profitability. While Tesla was able to grow 83%. They also got way more profitable, and this is sort of misleading because Tesla lost a ton of money in the front half of the year and made a ton of money in the second half of the year. So going forward now, I think Tesla is profitable. And this is potentially the biggest thing that happened in the call that caught me by surprise. Was this is what I had originally been expecting for vehicle deliveries for 2019 was to be about 420,000. I actually thought this was a little conservative, 120,000 Model S and X, and then about 300,000 Model 3s. And then Tesla in their quarterly letter, this is their real guidance. They've actually guided for 380,000 units at the midpoint, 360 to 340,000. So Tesla's guidance for 2019 deliveries is a little bit weaker than expected. And I do want to note one thing here in my model is I did diminish Model S and X deliveries from 120,000 in 2019 down to 100,000. And if you've been following the channel, I had this huge theory that they were going to have a huge Model S and X refresh coming up imminently, potentially announced on this call, and that didn't happen, but we're going to get more on that later when we cover the conference call. Now, if we take a look at the annual financials for Tesla, this is what my old model had heading into the call, 29.8 billion in revenue and 0.4 billion in profits for 2019. And with my new, with Tesla's new guidance, I've actually dropped my revenue estimate for Tesla to about 28 billion because of those weaker than expected vehicle deliveries. But then I've increased my earnings estimate to about 1 billion. And this is because of lower than expected operating expenses growth. And we're going to get to that in the letter in a second. But first, I wanted to go through this free cash flow chart because this is huge. Free cash flow, this is the chart we've all been waiting for. Tesla's operating cash flow minus CapEx. What's the number? Basically, how much cash is being added or subtracted their bank account each quarter. And this is what we've been looking at, this pattern of they start delivering the car, huge cash burn, and then start producing cash flow. What happened this quarter? This is what I had been expecting for Q4. Still profitable, 300 million, but way less than Q3. Look at what Tesla reported, 910 million in free cash flow. Actually an increase from Q3 because they had super low CapEx. And there was a couple other things where they had like $140 million expense to build the China Gigafactory, which they didn't count in CapEx. So you could say this is inflated a little bit, but no matter how you slice it, I mean, Tesla is printing hundreds of millions. And now let's move on to the letter. And this ties into this nicely. The top thing in the letter that they say, or one of the top things here, is their cash and cash equivalents hit $3.7 billion at the end of Q4, an increase of 718 million. So Tesla increased their cash position by 718 million this quarter. So for all those people who have been like constantly telling me, like, what about that debt coming due in March? Tesla's got this huge debt payment coming due in March. Isn't that going to crush? Like, okay, let's do some simple math here. Tesla has 3.7 billion in cash. They have a $920 million note left. That's about 25% of their cash position. So they could easily pay that out of pocket. The other thing to consider is Tesla's making hundreds of millions per quarter. This quarter was 700 million. So their cash in their bank's going up, and they already have way more than enough to pay for it. So to me, it's a non-factor. Of course, they can pay the debt, and they even reiterated that. Really interesting here in the letter is they mention where they will build the Model Y, and there is more color on this in the call, but they say that they want to achieve volume production of the Model Y at the end of 2020, most likely at Gigafactory 1. So this is something that I asked Elon Musk about like 3 conference calls ago, have made a ton of videos about, that I predict Tesla will be building the Semi and the Model Y at the Gigafactory. They've already said all Gigafactories going forward will have vehicle production. So now we've gotten Tesla to confirm that in the letter, which is huge. Additionally, here they said they're producing the Model 3 at a rate of about 7,000 units per week, and they have that on a sustained basis. And they also say that in Q4 the Model 3's gross margin stayed stable at 20%. So they're producing it at 7,000 a week. The gross margin is staying at 25%. I mean, or it's staying at 20%. This is great news. The last thing I wanted to point out from the letter is they expect services and other business to continue to grow because of used car sales volumes and sequential improvements in this part of the business, which I believe is also where supercharger revenue has. And this is part of the reason why I missed my revenue estimate was so off for Tesla. If we go into hypercharts here and zoom in on Tesla's revenue by different segment, if you go into the service revenue, you can see that this revenue took a huge jump from 326 million to 531 million. So I should have taken that into account, more Model 3s on the road, more getting fixed, more used car sales, more service supercharger revenue. And that is what's leading to partially Tesla's top line growth. Another thing here in the letter is operating expenses will grow less than 10% in 2019. So this is is huge. So they guide here 360 to 400,000 vehicles delivered. That implies a 55% growth rate in cars delivered, but their operating expenses are only growing 10%. This is the magic of Tesla's business model. They've hit maturity, they've hit scale. Fixed costs are only growing at 10% this year, probably in a huge part thanks to that layoff, but that's such minor growth when considering their core business is going to grow 55%. So anyway, now let's get into the notes of the company conference call, because this is what I'm sure you're all wondering. Starts out with Elon's opening remarks. Of course, as usual, he says this was the most challenging year in Tesla history, but also the most successful. Model 3 was the best-selling premium product or premium vehicle in the entire US in 2018. And he also goes on to note that Tesla had 80% market share of the battery electric vehicle market in the US. So think about it. Tesla, if you think pure EVs are the future, Tesla's 80% market share. He says if you track year-over-year delivery chart, you can see it's one of the most exponential curves I've ever seen. It's almost a clean double every single year in the fleet size. We almost build as many cars each year as we have built in all previous years combined. So that just gives you a little flavor of the growth of Tesla. And then, he's touting GAAP profit was the second in company history. They increased cash by $700 million, plenty to cover the convertible bond in March. Operating margin was around 5.7%. He goes, 2019 is going to be an amazing year for Tesla. We think we can grow 50%, maybe higher than 50%. And then he goes on to say, which this was huge because, we set up the whole website with Say to take shareholder questions for the company conference call. Tesla actually opened by taking questions from Say's website, which was huge. So thank you so much for all participating and helping and sharing that initiative, because we did it. So congrats to all the hyperchangers. I mean, that was unreal. And then what's even more interesting is I kind of felt bad because Sean Mitchell, who's my buddy Tesla tuber, had the top question on Say, which was about customer service, and he didn't get answered. But the reason why, in my opinion, is because Tesla saw that question and actually change their prepared remarks to answer it. So if you look at what Elon says here, he's like, one of my 2019 is an amazing year. One of my major priorities is improving service operations in North America. That's my number one priority this quarter. We have exciting initiatives in regards to that. They're doing a couple different things, but they want to make it so seamless to get service. You basically never know that your car has been picked up and gotten fixed. They want to make it, super easy to use in the app to set up an appointment, to request service. They also are doing things where they're going to change the infrastructure of how they're moving parts around their service infrastructure. So they addressed this immediately on the call. So I thought this was really, really promising to see them not only take questions from Say, but actually even it looks like read them and acknowledge them ahead of time. So I thought that was awesome. And he goes on to describe how, like, in terms of this parts logistics, they had parts stored in these parts warehouses, not at the service centers, and that was causing huge bottlenecks and delays. So now they're stocking common parts at service times, which should rapidly reduce turnaround times for your vehicles. In terms of new products, they said that they're designing the Model Y. They've completed engineering design. The Model Y is the 3/4 the same as the Model 3. Just to give you clarity on that, the Model X had about 30% in common with the Model S, and so Model Y at 75% of Model 3 should be very easier to ramp. And he says that reduces the risk of execution. That he thinks demand for the Model Y could be 50% higher than the Model 3, maybe even double, because the small SUV market is the largest car market in the world. He also says they've started construction at Gigafactory Shanghai, final paint assembly. They're going to have it all there. It's moving extremely fast. He's getting daily updates on this. He says the factory is going to go up like lightning. And I think this is really interesting, and that he says it'll help them hit that 10,000 per week run rate by the end of the year, which is, I've been to China, and the biggest thing I can tell you about China that was my takeaway is, man, they build incredibly high quality, massive buildings at incredible speeds. And I was just blown away with their physical infrastructure. And so when Elon says the factory is going to go up that quickly, like, I just really, really believe it. And he even gives this clue that says we want to hit volume production in Shanghai by the end of the year, which will help us hit a 10,000 unit per week run rate. So it sounds like they're waiting for Shanghai to hit 10,000 units per week, and it's going to be materially impacting Tesla's production rate by the end of this year, 2019. So I'm sort of writing that off in my model because I just think that's almost too good to be true, but that's what they're saying. Then we go to the Q&A. First question, and this is where they took the questions from Say. Thank you guys again so much, but I just thought this was an awesome moment to see Tesla put its retail investors and customers and the little guy ahead of the Wall Street analysts who, I don't know. Thank you guys so much for participating. Anyway, so they gloss over the first question about service because they answered it in the prepared remarks. Sorry, Sean. But Rob's question is then the next one, which gets asked, which was about demand, basically steady state demand for the Model 3. And Elon says, okay, so the best guess for demand worldwide for the Model 3 in a strong economy is 700,000 to 800,000. He said this before, basically reiterating. He goes, then if we go into recession, I think it's 40% less, about around 500,000. For S and X, he thinks demand could actually, or sales could actually go down a little this year. And they said he did eliminate, because they eliminated the 75 kilowatt hour model to provide more differentiation for the Model 3. And then he says, although there's likely to be a decline in volume for S and X, free cash flow from that program could increase because they're doing the higher margin cars. So that's interesting. And if you think about it from Tesla's perspective, they're selling you a $75,000 car. They'd way rather it be a fully spec'd out Model 3 that's ultra high margin than a super low margin Model S. I think that's what's going on there. Then there's a question about fully self-driving, also from Say. Basically, there's Elon is saying the next sort of big step is now you have navigate on autopilot. Eventually, you'll be able to go on and all the way off the highway ramp to a full stop with just autopilot. And then the next real big challenge after that is stoplights and traffic lights and intersections. He actually said stop signs were easy, but that traffic lights and intersections will be sort of the next huge thing. Additionally, they have an advanced summon mode where cars can navigate complex parking lots, probably coming next month. And he is also like, in development mode, I can do all these things in the car, but it's just in like reality, we don't do them all. And then he says, personally, we will think Tesla is safe enough for safe driving probably by the end of this year, but regulators will not want to approve that or won't approve that right away. And then on the Model S and X, this is another question by Anwar back from Say. He asked, what about the 2170 cells for the Model S and X? We're going to switch to those. And then Elon says no plans to switch the Model S and X to 2170 cells. Can't comment on future product developments. Okay, really interesting. Glad Elon answered this. This is the This is also the reason why I would love to be able to ask these questions myself, not just have IR read them. Martin, if you're listening, here's my pitch. Because I would have asked a follow-up here, which is why then, when in your shareholder letter, you say the 2170 cells in the Model 3 is like the best, most efficient thing in the EV world, it's the state-of-the-art battery cell. If we have this technology and we're ramping it, why are we not putting that in the S and X? So that would kind of would be my follow-up, but anyway. Then my question actually did get answered, which was about Model Y and the semi and production times and ramps for those vehicles. So they answered that. The Model Y is being built at the Gigafactory, which is crazy. To get confirmation on that, going to start super low volume early 2020, scale volume in 2020. And then for the semi, they sort of walk back on their thoughts that the semi truck will start being produced in 2020, but all of those all the first semis produced are going to be for internal usage for Tesla, and then they'll start customer delivery. So I kind of got the vibe that the semi is a little bit further down on the product roadmap. Then Elon, still answering my question, which is so epic, throws this in there that the Tesla pickup might be ready to unveil that this summer. Quite unique. So I think the Model Y unveiling has been pushed back from March to the summer, and the pickup's also going to get unveiled. Anyway. Then we go into the normal Q&A with Wall Street analysts, and it did get a lot boring after this, so that's not my fault. They ask about CapEx for the China factory. Tesla confirms they're looking for local bank partners to put up a lot of the money for that, and that they don't see too much of an issue there. And that also Elon goes on to point out of how like big of a deal it is that China has allowed Tesla to have the first fully owned car factory in the entire country. This is huge. Previously, you had to build a joint venture to do that. So China's opening up and democratizing their economy with Tesla as an example and leader of that. This is huge. I'm going to make a whole episode on it. Anyway, so more on that later. Loop Ventures, Gene Munster, who has been on Hyperchange, is like my favorite analyst, came in to ask a question. I thought that was awesome. He's like, Waymo valued $175 billion. What do they have that you don't have? Is autonomy a part of the main story of Tesla? Elon also like laughs when they say that what does Waymo have that you don't have? So I thought that was funny. And then of course, Elon says basically like, look, okay, so our goals at Tesla are first to accelerate the transition to sustainable energy, because that's the biggest problem we face is fossil fuels polluting. The second biggest mission is to accelerate the advent of autonomy, because we can save thousands of lives, millions of injuries, and give people their time back. And I love this entrepreneurial vision of like, just giving people their time back is so valuable. And that's the traffic problem. They have 300,000 cars on the road now, this 360-degree camera suite, always connected, always uploading this data. They effectively have a massive training fleet. The miles of training we had, if we add them up, are probably, if you add up everyone else's miles combined relative to Tesla, they're probably only 5% of the miles that Tesla has, and the difference is increasing, and I'm probably being too generous, is what Elon said. So he basically says, look, like we have more data than Waymo. That's why we're going to win. Then there's the whole LiDAR debate. We didn't get into that on this call. So anyway, Oppenheimer, can you talk about geographic dispersion of 2019 deliveries? They basically say like, just look at the letter. UBS, Colin Langan, for the 700,000 to 800,000 end demand of Model 3, he says, what price range is that? And then Elon basically says like a lot of caveats, like, okay, it's really just a guess, but at 42,000, what's the key insight there? That they have to hit the $35,000 Model 3 to really, reach that 700,000 end level demand. Deutsche Bank goes on, latest thoughts on the short range Model 3. When is this going to come out? He basically says the standard range Model 3 is going to come out sometime in mid 2019. Still don't have more clarity. And also he kind of mentions that he is subtly wants to build 350,000 to 500,000 Model 3s this year, which is way more than the guidance they put out officially. So I personally think the guidance, which was lower than what I was expected, is a huge, huge sandbag, but that's just a guess. And Deutsche Bank goes in on that because he's like, look, like, if we assume 360 to 400,000 cars, that's basically 90,000 a quarter, which is what you just delivered. So there's no growth. And so I think it's a sandbag. And then Elon does make these interesting comments about the demand for the car is insanely high. It's just the price that's too much. And people just can't afford it. And so if they bring the price down and get that $35,000 car there, they'll be able to hit those targets. New Street, Pierre Ferragu. He's awesome, or Farrago, I don't know how to say his name. Are you concerned about a global recession, basically? What would the impact be? How would that change your spending? And then Tesla's like, look, we are super disciplined. Like, we think we could even be profitable in the next recession. And I think Tesla internally has been preparing for a recession. This personally was my most, like, as an investor, and if I'm an investor who's worried and super like a worry wart, this is what I'm going to love on the call, which is they're saying like, look, like we basically predict a recession. We're getting super lean to get in front of that. And we want to make sure we can survive. And then Elon basically says like, we had to fire people to just be able to survive and put out the $35,000 car. And that's why we did. And I think Tesla overly exaggerates how close they are to death, when really this is a company that's today, at least, on very, very sure financial footing. And they also go on to say here how like the CapEx per unit of production is getting so much more efficient with Model Y. Like everything they're learning is really adding up to vastly more efficient CapEx spend. And the big misnomer here, which a lot of people don't get, is they assume that a lot of Tesla's CapEx is maintenance CapEx that would continue in a recession. I think that's totally not true. The bulk of Tesla's CapEx is growth CapEx. That's why this quarter, where they barely grew production, CapEx shrank, but what's evidence these days? Anyway, so the point being is, if there's a recession that hits, Tesla won't need to grow production, therefore they can drastically shrink CapEx, therefore their cash needs diminish. So I think Tesla is in a very lean, good position for the next recession in terms of being an automaker. Then David Tamburino, China and Europe demand going, how's that looking? And then Elon has this interesting tidbit of like, the biggest challenge this quarter is not demand in Europe or China. It's how do we get the cars there fast enough? It sounds like they're very worried about having like 20,000 cars on ships, not to customers, so they can't get the cash. And that's sort of what is going to be a drag on this quarter. So I thought that was an interesting tidbit. Then they talk about customer deposits. They're over 900 million. Can you give us, any more clarity on the reservation count? How many do we still have? And they basically said, like, we're not talking about the reservation count. Demand isn't our problem. And then Elon goes on to say, like, China is super important though, because this is how we're going to hit like our 500,000 year target for Model 3. And then he throws in this tidbit of phase 1 of the Gigafactory is just 10% of what the Gigafactory we think could be there. It's a major, major deal. We have a ton of support from the government. So another interesting tidbit there, that Tesla's just a couple 100,000 cars in Shanghai. Sure, that's great, but they have much bigger plans. Tony Sacconaghi talks about the need to repeatedly drive down the price. He's basically like, look, like, is there just something structural with EVs, like the drivetrain being too expensive? That's the reason why we can't hit that $35,000 Model 3. And then Jerome comes in and basically says it's a combination of everything. Like, it's that, but it's also like, I'm half the time at the Gigafactory, and there's just improvements we can make on the manufacturing side in a ton of different places. And that is what it's adding up to getting to that $35,000 Model 3. Another question about, would they sacrifice margin to deliver more cars in, would they rather deliver 500,000 cars at 20% margin, or, 360,000 at 25%? Elon basically says it's a wash, but they would probably lean towards delivering more cars at a lower margin. question about battery costs they couldn't answer. Then there's another tidbit about the China parts thing and how like specifically like even the customer service thing, like customer service in China was a difficulty because they were making parts in China, shipping them to the parts warehouse in Jersey, then shipping them back to China. And like there's all these sort of dumb, inefficient logistical things that are happening with Tesla because they've grown so fast, which have hurt the service, which they're now addressing. So it sounds like the service is really the clear priority. And then there is another question from Ben Callow, but he doesn't say much. That was the last question. And then the call wraps up with Deepak saying that he's retiring. And yeah, so kind of a sad day for the Tesla community because Deepak's been CFO for 11 years. Awesome. He's always on the call. He's just a great CFO, great guy. I mean, I've never met him, but he seems cool. And so definitely a bummer to see him go, but they promoted some guy who's been there, who's internal, who's young, who sounds sharp. And it sounded like a really sentimental sort of like sad. I felt like Deepak was like genuinely sad that he was leaving, and he has tried to retire before and actually came back because he liked Tesla so much. So I don't think we've seen the full story on this. And frankly, like I've seen a lot of tweets that are all about how, oh my God, Tesla's CFO left. Like, oh my, that's the only thing they take away from this conference call and their earnings is that the CFO left. Like this is some smoking gun, like red flag that the fraud is real. It's like, he's working there for 11 years. He's already tried to retire. Like this is so normal and run of the mill. And the journalists who I don't want to name because they're people that I work with in the past, like are saying like, oh, and Tesla's squeezing this in at the buried at the end of the conference call. Like that's sketchy. It's like, no, it wasn't. That was the exact appropriate time to make that announcement. I've listened to hundreds of company conference calls that usually wait till the end to make these like minor personnel changement announcements. That's totally run of the mill. This is the most boring run of the mill CFO change that I've ever seen in terms of company conference calls that I can recall. The company just reported 2 quarters of profitability. They've been crushing it. Things have finally evened out. They're smooth. This guy's ready to retire. He hands off the reins to a young guy who's on the come up, who's worked there for a while. This is the most standard basic transition you're going to get in business that has no material impact on the financials of Tesla, but that everyone in the mainstream media is shouting about as this smoking gun. So that's just an example to show you how, frankly, I genuinely, right before I recorded this, was like, really like frustrated and like angry because it just like makes me so sad that Tesla makes all this progress. They're such an amazing company. They're changing the world and journalists can't figure that out. And all they quote about is the CFO leaving because that'll get them more clicks. Really sad. And you're going to see that tomorrow. And anyway, it just sucks. But anyway, so but moving on, what they're missing here, what I'm so excited about is look, Tesla just reported its second quarter of positive cash flow and earnings. Not a little bit, a lot, like billions. Like operating cash flow, if we go to hypercharts, was 1.2 billion. So they've reported 2 quarters in a row where operating cash flow was over $1 billion. They've done $2.5 billion in operating cash flow in the last 2 quarters. If we annualize that, that's $5 billion in operating cash flow. Anyway, you get the point. The biggest inflection point in Tesla's business model has occurred. They are no longer a company that is consuming cash or at that part of their business cycle. They are producing cash, and that cash is looking like billions per quarter. And I think we are just scratching the surface of Tesla's earning power, of their disruption. I mean, this is the most exciting product pipeline. The Model Y is coming out, scale production 2020, China Gigafactory, scale production by the end of 2019, Power Pack energy storage sales or installations set to double this year, Solar Roof, that's also in our back pocket. And on top of that, we haven't even started delivering the Model 3 internationally to China and Europe, yet we're already making billions in cash flow. And so to me, the story of Apple, this being the Apple of the automotive world, of this disrupting the industry, of this being the most profitable automaker of all time, it's never been more closer to reality, yet the stock price isn't reflecting it. Like, I don't know. If this thing stays at $300, I'm going to keep buying it every single month with my paycheck because I think it's undervalued. I thought these numbers were incredible. Tesla's being profitable for the second quarter in a row. I don't think any skeptic thought this was going to happen. And I just think that's worth like, and huge shout out to Tesla. Huge shout out to Deepak. Sorry you're retiring. You're awesome. Elon, thank you so much for everything. Martin, head of IR, thank you for giving Say a shot. I just think Tesla's awesome, and I want to congratulate you guys on an unbelievable quarter and transitioning the world to sustainable energy because nobody's doing it, and everybody's fighting you. Nobody wants you to succeed, and you're doing it, and that is inspiring, and you're changing the world, and it's amazing to be a shareholder and be a part of it. And huge shout out to Say for building the earnings call product. Huge shout out to, and just everything. Yeah, Say is awesome. I really hope this is just the first conference call and of many companies that use this technology. And huge shout out to you guys watching Hyperchange, sharing the videos, sharing the Say website. You made this all possible. And so thank you so much for tuning in. I'll see you guys next time. Happy Tesla earnings. Hopefully you have a good night.